Thanks for joining us on Power Lunch. This is Bloomberg Quint. I'm Harsha Subramaniam. The headlines at this hour. Markets hold on to slim gains as investors remain wary of taking new positions amidst tensions between India and Pakistan. India's GDP is set to grow at its slowest pace in 5 years after the third quarter growth falls to 6.6%. Government also revises second quarter growth to lower 7%. The new WagonR fails to help Maruti post growth in February. Mahindra & Mahindra also sold fewer tractors last month. Naresh Goyal will step down as chairman of Jet Airways in an attempt to save the airline, but the final recast plan is still in the works and lenders and Etihad failed to reach an agreement. Bharti Airtel will raise 32,000 crore through a rights issue and perpetual bonds as it looks to deleverage its balance sheet. There's some nervousness on the screen, specifically for the broader markets. Yatin is here with a closer look at what's going on in stocks today. Yatin.
Good afternoon, Harsha. And the situation in terms of advance decline on the Nifty and the markets is slightly better than yesterday. Right now on the Nifty, we have almost 4 advances to 1 declines. So in general, the market is bouncing back from the lows made yesterday and the kind of future and option expiry scenarios that we saw yesterday. We are trading about that 10,800 mark, and in terms of top gainers, we have the likes of Yes Bank, Adani Ports, Zee and Vedanta. So all of these stocks gaining anywhere between 2% to 4%. Good gains coming in for the non-ferrous metal pack. In the losers list, Bharti Airtel, after they announced the rights issue yesterday, is down 3% in trade. The stock is trading at almost 308 levels. Axis Bank, Cipla, and Adani, Asian Paints, these are the few stocks which are trading in the red. However, if you look at the active side, SBI Life Insurance, that is one stock which is quite active. There have been a couple of block deals in early morning trade. Post with the stock fell 10%, and post that we have seen a very sharp recovery, 3% up for that one. So SBI Life post the block deal among institutional investors, wherein over 8% of equity change hands is active, and so is the case with Reliance Power as well as CG Power. Both of these stocks are doing well in trade from the mid-cap perspective.
Yatin, thank you for that. That's the markets for you. Let's talk about the broader economy. The Indian economy slowed down more than expected in the December quarter, pushing the government to moderate its growth estimates for the full financial year. The 7% growth projected for fiscal 19 now stands at a 5-year low. Ira is standing by to tell us what really has caused the slowdown.
The many revisions in past GDP data means that it's very tough to glean any key takeaways or clear takeaways from the GDP data that we're getting these days. But nevertheless, we'll try and give you a sense of what came through in the second estimates for the full year growth of FY19 and also the Q3 numbers that came through on Thursday. For the full year, we're expecting growth at 7% now. That compares to the earlier estimate of 7.2%. At 7%, it's the slowest growth that we will see in about 5 years in the Indian economy. If you're looking at a quarterly trend, then the expectation is that you'll see quarterly growth rates fall to 6.6% in terms of GDP growth. This compares to 7% revised growth in Q2 and 8% revised growth in Q1. In GVA terms, growth in the Indian economy is expected at 6.3% in the third quarter of FY19. Now, in terms of expectations, this is not too out of line with what was being expected. But one primary reason for the ups and downs that we have seen in growth is that you had seen revisions in the FY18 numbers. And because FY18 numbers had been revised upwards, FY19 numbers in terms of year-on-year growth look a little bit softer. And that is one reason why you're looking at 7% growth for the full year. If you're looking at sectoral trends on a quarterly basis, Q3 agriculture growth is at 2.7%. That's weaker than the 4.2% in Q2. Manufacturing growth is more or less steady. Construction is actually strengthened to 9.6% growth. Mining at 1.3% is also stronger than what you'd seen in Q2, where you had negative growth in the mining sector. There was some attention that was focused on financing because of all of the NBFC troubles that we've seen, but we haven't seen that in the numbers yet. So growth in the financial services real estate sector is flat at about 7.3%. It was 7.2% in Q2, but perhaps those numbers will start to show up in the financing segment with a little bit of a lag. Public administration, which is government spending linked, there, of course, you have seen a slowdown to 7.6%, suggesting that the government's tight finances may have had some impact on that particular segment. The broader story, if you're talking sectorally, is certainly one where agricultural growth has been weak on a nominal basis throughout this year. In fact, in some quarters, you've seen nominal growth below real growth, which is telling you the price effect, the fact that agricultural prices have been deflating, and that's been impacting incomes in the economy, in the rural economy in particular. But if you see manufacturing and you see construction, both between FY18 and FY19 has actually seen strength, and that's something to be, well, relatively positive about. Construction is stronger because of large government spending on infrastructure, so that's not entirely private sector activity. But core GVA, which strips out agriculture and government services, has strengthened in terms of the quarterly change, and that's being seen positively by economists. The expenditure side trends tell you that you have seen a sharp slowdown in private consumption between Q2 and Q3, but it is still at a higher level than what you'd seen in Q1. So not clear whether you're seeing a very steep slowdown come in because of one-off factors. Some of it may be because of the NBFC crisis, or whether there is a secular trend of decline in consumption growth rates. That's not entirely clear yet. The investment side held up nicely, but government consumption expenditure was down again, a story linked to the government spending side. One last takeaway, an important one, which was pointed out by Devendra Pant of India Ratings and Research in his note, is that the size of the economy in FY19 is now at 190 lakh crore, 190 trillion, compared to the earlier estimate of 188 lakh crore. That has a bearing on the fiscal deficit number. Because the size of the economy has gone up, you will see the fiscal deficit target of 3.5% being met slightly more easily than it would have been if we hadn't seen those past revisions to the GDP data. So, those are some of the takeaways. In terms of policy or interest rate takeaways, I don't think the message has changed. Economy is subdued and inflation is under the 4% mark. So it certainly does still leave room for the MPC to cut rates.
Thank you for that. Well, also spoke to the former CSO Pranab Sen and SBI Chief Economic Advisor Soumyakanti Ghosh to understand the pockets of concern in the Indian economy right now.
As far as the agricultural data is concerned, you really need to take a somewhat longer term view on it. And what I had been expecting was that the figure would be somewhere around 2.5 to 3%, which would keep the 3-year average to where we want it to be, which is probably somewhere between 3 and 3.2%. So that's not really a slowdown. It's just a reflection of a bump up that happened a year ago. So that the output number is not a surprise, and it's not alarming in any important sense. What is alarming is what Shomo pointed out, is that what we are seeing is a situation where the nominal number is running below the real, which means farm incomes continue to take a hit quarter on quarter. And this is bad news all around.
There is an element of a demand slowdown. If we actually look into the leading indicators, I think we are actually comparing the percentage of leading indicators which are showing an upturn in subsequent months, and that number is now below, I think, around close to 50%. That means out of the 30 or 35 all variables, the leading indicators, at least half of them are showing a deceleration than what was in the month of December, or could be in the month of January. So that indicates that demand is slow in the system. And another important thing which I would like to say regarding the data is that if you look into the historical evidences, and we have found that every year, the election year, the year after the election always shows a growth rate which is lower than the growth rate which was in the pre-election year. So that is one point which we need to remember, but this time the trend actually has been opposite. We are showing a slowdown in growth rate even before the election quarter is there. So that's a matter of concern.
Okay, those are two voices on the GDP numbers. Bank credit, meanwhile, credit growth, that is, to the industry, which has slowed down over the past few years, has managed to show a sharp rebound in the new year. In fact, credit growth in January stood at a 3-year high. Advait Rao is here to explain to us what really is going on. Advait.
So bank credit to the industrial sector has grown at around 5.13% on a year-on-year basis for the month of January. The RBI data shows that the bank credit to industry is at around 27.5 lakh crores. about 84% of this credit has gone to the larger sector players, while the medium to micro and small players have also seen a small amount of growth. The large industries have absorbed about 22,700 crores worth of credit in this past year. And we've also seen that NBFC's credit from banks has also risen at around 48%. On a year-to-date basis, it's up by 12% compared to negative growth in the year between April to January 2018.
Interesting, Advait. Thank you so much for that. That's the credit growth story. Meanwhile, let's talk about what's going on with Jet Airways. Naresh Goyal has agreed to step down as chairman of Jet Airways. Goyal, who met with lenders on Wednesday, was left with little choice, according to two people with direct knowledge of the matter. Vishwanath Nair has been tracking the story for us. So what's the road ahead? What happens to Jet Airways? What happens to the lender situation?
To start with, Harsha, I mean, you said a little option. I mean, that was the only item that everybody in that meeting agreed upon. So this meeting that started late evening on Wednesday went on till midnight. And later on, apparently, what our sources are telling us is that SBI and Etihad had a longer meeting even after the rest of the lenders left. The idea essentially was to finalize on the resolution plan, which has been in the making for a little close to a month now. Remember, December 31st, Jet Airways defaulted on its loans. Jan 1st, they informed the world about it. Since then, the bankers have been trying to, resolve the stress in the company. 10,000 odd crore worth of debt in the company. The resolution plan at this point in time stands as what we have discussed earlier. A part of the loan is going to get converted into long-term equity-like instruments like CRPS. The rest of the debt will get rescheduled. Eventually, the 11.4 crore shares which are being allotted to the lenders will be used to offset some of the haircut that they're going to take. So this plan remains as is at this point in time. No lenders have voted on the plan as such, but one of the parts of the plan is that both the promoter as well as Etihad will bring in some equity into the company to stabilize operations to keep the airline essentially afloat. But for that money, Etihad is putting up some very stringent conditions. We still do not have the exact conditions that Etihad is placing in front of the bankers, but it seems that the State Bank of India and the rest of the lenders are not in favor of agreeing to everything that Etihad wants them to do. There is a talk of a rights issue at some point later, where the promoter as well as Etihad will bring in some equity, to try to maintain their shareholding in the company. Lenders will end up with about 51% equity in the company, and thereby will be the largest shareholder. So the balance has to be set at some point in time. Eventually, they are also talking about bringing in a new investor. There is talk of NIIF investing in the company. We were not able to ascertain that independently, but all of these names are still in play. Eventually, the lenders will have to come to an agreement with Etihad at the earliest possible time, so that they can finalize on this resolution plan and implement it in the company. According to the RBI's February 12th circular, they have 180 days from the date of the first default. So sometime in June, that timeline will run. And then you will have to go to the NCLT for an insolvency proceeding. And that's something that the bankers want to avoid at all costs. Correct. They're afraid that they're going to lose out on whatever recovery is possible today. So eventually, once they come to an agreement, this plan can be implemented, equity can be brought in, and eventually Jet Airways can be stable in terms of its operations and its debt position.
Krishna, thank you so much for that. That's the story of Jet Airways. Airtel, meanwhile, is looking to raise funds to strengthen its balance sheet. The telecom operator has decided to raise 32,000 crore through rights and perpetual bonds. The proceeds will be used to cut some of its debt as it looks to take on Reliance Jio. Sumit is standing by with some details. Sumit.
So I'll just take you to the details of how they're raising this amount. So if you see the 32,000 crore rupees, of which 25,000 crore rupees is through a rights issue. Now, as it is a rights issue, the promoter will be putting in close to 16,785 crore rupees, while the remaining 8,215 will come in from the public shareholders. Now, of this 32,000 crore rupees, the company will also issue a foreign currency denominated perpetual bonds worth 7,000 crore rupees. So what is a perpetual bond? It's a fixed income security which has no maturity date, which means that the company will only have to pay the fixed interest payment that is linked to this bonds, and they'll have to never repay the principal amount, that is the 7,000 crore rupees. Now, we do not know exact terms and conditions of these bonds, so we cannot say the interest outgo what it will be, but that's the only part that will be liable for Airtel in the yearly amount. Then they do not have to pay the principal amount. Now, if you see, this perpetual bonds will also not form a part of its Bharti Airtel's total long-term debt. So that is one more positive thing that is coming in from this issue of this perpetual bonds. Now, if you see the rights issue, now Every shareholder which owns more than 67 shares will be eligible for this rights issue, and the entitlement ratio is 19 shares for every 67 shares held by the eligible shareholders. And the price set for rights issue is at 220 rupees. That is a discount of nearly 31% to yesterday's closing price. So that's a big discount coming in for this rights issue. Now, a simple math here will show you why this rights issue price of 220 rupees is attractive for an investor. So suppose an investor buys 67 shares of Bharti Airtel at yesterday's closing price, that is 318, would have cost him close to 21,300 crore rupees, 21,300 rupees. So after buying the 67 shares, he will be eligible for this rights issue of 19 shares, which would cost him around 220 rupees per share, which would take the total cost of this 86 shares, that is 67 shares that he bought and the 19 shares of rights issue, to close to 25,500 rupees. Now, which means that the per share price would be close to 296 rupees, which would be a discount of nearly 7% to yesterday's closing price. So it's at a discount, so that's the reason it's attractive for an investor. Lastly, this fundraise will obviously reduce the company's debt and leverage if you assume that they are using the entire proceeds to repay that debt. So if they do that, the debt would come down by nearly 30% to close to 73,000 crore rupees, while its leverage ratio, that is net debt to EBITDA, would come down to nearly 2.9 times from 4.2 times earlier, which is a big positive for the company, because if you remember, recently the company's ratings were downgraded by Moody's because of this higher leverage ratio.
Soumya, thank you so much for joining us with those details. That's Airtel's issue. Let's move on. Automakers have tried deep discounting and promotional offers in the hope of recovering from the slowdown seen in the past few months, but it's failed to accelerate growth. Auto sales numbers reported so far have show that demand have remained quite muted in the month of February. Yatin is standing by with a snapshot of what's happened. Yatin.
Afternoon, Archan. That's right that we are looking at a general slowdown in auto sector. Most of the companies are talking about a recovery that could probably happen in Feb, but that's really not happening in terms of the growth numbers that we are seeing for the month of February, which have been reported so far. Now, if you look at Maruti Suzuki, they came out with the numbers first. Their sales are almost flat on a year-on-year basis, and this is largely to do with the fact that the mini segment sales have declined by 27% year-on-year. Of course, this is to do with the phasing out of the old WagonR, and the new WagonR comes in the compact segment in terms of the category identification, and export markets also fell 20% for them. So not a great number for Maruti Suzuki. The Bloomberg Quint poll were expecting a number of 1.55 lakh units, so slightly short of that in terms of the delivery. Ashok Leyland again, the February auto sales stood flat at 18,245 units odd. However, if you look at the medium and heavy, commercial vehicle segment, the truck sales were down nearly 4% for Ashok Leyland, and probably that impacted the stock price, which is almost down 0.5% in trade right now. Escorts reported a healthy set of tractor sales, 12% growth seen there. SML Isuzu, and look at the stock, it is locked in 20% upper circuit. The company reported a 33% growth in their overall vehicle sales. Bajaj Auto reported a 10% growth below the Bloomberg Quint poll of 4 lakh units. 3.93 lakh units is what they delivered in terms of overall numbers. The domestic motorcycle sales growth was 6%. However, the three-wheeler segment, which is one of the profitable segment for them, that declined by nearly 9% in the domestic market. And finally, we have Mahindra and Mahindra. They also reported numbers. 10% growth seen, for their automotive segment on the back of new launches that they have done recently, which includes the XUV 300 as well as the Marazzo. And tractor sales disappointing. A decline of 8% was seen for the month of February year-on-year.
Thank you for that. Let's move on now. The cabinet yesterday approved soft loans up to 10,540 crore for sugar mills to help them clear cane arrears to farmers. The financial aid follows the MSP hike of 2 rupees per kilo announced a couple of weeks ago. We spoke to Sanjay Tapriya, director of Saboli Sugars, to figure out how these loans will actually help the industry. Listen in.
Well, this is another welcome move, and definitely the gesture of the government is appreciated. However, important here it is that a large credit facility has been granted to the sugar mill, but to be seen is the ability of the sugar mills or their balance sheets to absorb this credit. Because in the past also, a couple of these things, particularly in UP and also from the central government has been given it. And quite a few millers have not been able to utilize it because they don't have a capacity to borrow further. And secondly, the first year interest, and post that the interest will have to be borne by the millers, which is not coming out of their profitability or because their cost of production is higher than the selling price. So this is to be seen. But in totality, I say that the government is fully aware about it. And we would like, as an industry, that this should be made applicable, or it should be made available to almost all the millers, irrespective of their balance sheet or their ability to borrow, etc., so that the benefit be given to the farmers.
The Indian Armed Forces addressed the nation last evening to set the record straight on this week's events. They presented proof to establish that Pakistan used F-16 jets to violate Indian airspace. They also refuted Prime Minister of Pakistan Imran Khan's claims that it was a non-military strike. NC Bipindra of Bloomberg News now joins us with more details on what we know so far. Bipin, what really did come out of this?
What the Indian Armed Forces have stated is that they are very clear that the F-16 of the Pakistan Air Force used in this attack that was done on India, and then the F-16s had dropped a air-to-air missile on the Indian territory. And the Armed Forces also presented the evidence in the form of a missile part that they recovered from the site where the bombs were dropped. So they made it very clear, and this actually caused a diplomatic row between Pakistan and the US, for the simple reason that the US has restricted any sort of use of the F-16 or the weapons that F-16s carry on any other country that is friendly to the US. So this is the kind of diplomatic row that has erupted, and this restriction was imposed by a US Senate resolution called as the Pressler Amendment in the 1990s. That has been carried on for the last couple of decades, because of which this has created a diplomatic row.
Bipin, thank you so much for joining us when putting that in context. Also remember that Pakistan's promised to release Wing Commander Abhinandan Vardhaman today, who is in their custody. Does this mark the beginning of de-escalation of tensions between India and Pakistan, or will domestic politics have a bigger role to play? Joining us now to talk about this is Sriram Cholia, Dean at Jindal School of International Affairs. Sriram, thank you so much indeed for joining us. My question is exactly that. Now that we are seeing, at least so far, the Pakistan side offering to release Abhinandan Vardhaman, who's expected to be released any time now, will this end up diffusing the tension that we've seen in the past week, or do you think that the escalation is likely to continue?
Well, our Prime Minister's indicated that this is going to be a long campaign, and that only the trial run or the practice has been done, and that there's much more to come. So I think we do need to maintain control over the escalation and de-escalation metrics to be able to achieve our goal of establishing total deterrence against Pakistan-sponsored terrorism. So my own view is that, yes, the military skirmishes for now are very well likely to to tone down, but we are also playing on the diplomatic front. We are trying to mobilize international opinion to proscribe Masood Azhar at the UN. Sushma Swaraj is at the Organization of Islamic Cooperation conference today, and again mobilizing opinion. The Pakistanis are so angry that India was given guest of honor status by the OIC. So I think there is a wider campaign that is going to be relentless, and we should not rule out further strikes, precise strikes at jihadist camps and individuals as well. The Pakistanis are admitting that Masood Azhar is very much in Pakistan, and so is Hafiz Saeed. So if you take the longer view, I think that we are just, in a way, we have just embarked on what is likely to be an extended struggle over several months, if not years, to be able to finally, corner and isolate this jihadist problem there. So my view is that we are now we have seen only a small flash of what is likely to be a long campaign. And frankly, it's not related to the elections, because at the end of the day, India's national security is being threatened by repeatedly through these infiltrators and cross-border indoctrination and infiltration. So we need to look at it beyond, our general elections. I am pretty sure Prime Minister will continue this campaign even after he gets re-elected, which is, of course, undoubted.
Sure. Okay. Now, if I look at just the events over the last couple of days, and this is also a perception game. Has Pakistan gained an upper hand in playing to the gallery in a sense? Prime Minister of Pakistan offering the dialogue, then allowing the release of Wing Commander Vardhaman. Have they claimed the moral upper ground on this one?
Well, it's a PR stunt and it's a gimmick, and to some extent, Western media are saying that Imran Khan has stolen a march over Modi by presenting himself as cool and collected and calm and non-jingoistic and ready for peace, and he's releasing our pilot. But I think he's made a virtue out of necessity, because one, they would have to have released Abhinandan anyway as per international law, and secondly, they are facing tremendous pressure from Saudi Arabia, UAE and the US, which we are lobbying behind the scenes to releasing. So they were anyway compelled to do it, and it's not because they are peace-loving per se. And I think our campaign is going to be that, okay, well and good, but the point is the terrorist threat remains, right? And even if there is a de-escalation for the moment, even if Pakistan has, scored some brownie points in the Western media by appearing to be magnanimous, the terrorist threat remains. And our mobilization of the international community is pretty strong. People don't realize it. The UN Security Council resolution that was passed after Pulwama was unprecedented. We had all 15 members of the Security Council, including even China, voting in favor of it. And it clearly mentioned Jaish-e-Mohammed, and it asked for states that are sponsoring and harboring these to be immediately, brought to book. So we have mounted, several international campaigns, and I would say that overall, if you look at it, the fear of jihadist extremism and terrorism is very, very high and is universally, resonates much more than, Pakistan releasing a pilot. So in the long run, as long as these camps are there, as long as the terror infrastructure is there, we're going to keep on hammering this point. And I feel, we are victorious because we are a democracy. We are not a military-dominated country like Pakistan. And two, we have a big economy. Look at Saudi Arabia. I mean, just look at the difference. Mohammed bin Salman is investing $100 billion in India, he promises, and $20 billion in Pakistan. So that is like chalk and cheese already for us. So in the long run, our economic superiority, our democratic superiority, and the merit of our argument, which is that jihadist terrorism should have no place in any civilized nation, these three are the winners. And I think the public opinion globally will remain with India, but it's just, Imran Khan is going to try and milk this situation to try and maximize some attention for himself and to show how much he's peace-loving. But in the long run, whenever there are attacks, whenever this, as long as this threat is festering, I think Pakistan is going to be on the back foot, because internationally, most countries are vexed with them and the way they are behaving.
Shriram Chalia, we leave it there. Thank you so much indeed for joining us with your perspective. That's the Dean from the Jindal School of International Affairs. Disagreements over sanctions cut short the Trump-Kim summit in Hanoi yesterday. But what came as a surprise was Kim disputing Trump's claim that North Korea wanted an end to all sanctions. Stephen Engel reports.
For an event that really ended up with nothing, it sure was a busy day yesterday. From very early on in the morning till late at night, Bloomberg was there covering every inch of it. It was a fascinating night because we got the press conference from Donald Trump after he cut short the summit with Kim Jong-un at the Metropole Hotel, where I was camped out all day long. They didn't have lunch. They didn't have a joint signing declaration. They didn't have a joint statement. And he left saying that the North Koreans wanted too much. They wanted full relaxation of sanctions. And Trump says, we're not going to do that. We're not in a position yet because the North Koreans have not given enough of a pledge to dismantle their nuclear weapons arsenal. So, skip forward to late in the evening, 10 o'clock at night. Our team gets a phone call saying, we're going to have a press conference. The North Koreans are going to have a press conference. They don't do that. They don't call up the foreign media and say, we're going to have a press conference. They did. The foreign minister and the vice foreign minister, who you just heard from, having a press conference and really refuting what Donald Trump had said. And they were saying, listen, we didn't ask for complete relaxation of all the sanctions. They wanted some of the sanctions relaxed in exchange for access to the Yongbyon facility, as well as pledges to stop uranium and plutonium enrichment processes at Yongbyon. Well, Donald Trump said that was not enough. So we always knew that this summit, #2, was not necessarily going to be about the dynamic between Kim and Trump. It was going to be about efforts to denuclearize by the North Koreans, and it was going to be about sanctions relief by the United States. None of that happened.
Stephen Angle reporting from Hanoi. Out of time on this show. Thank you so much for joining us today.